Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. Please reach out to those individuals if you have any questions regarding your portfolio. Please read the disclaimer again. With that, D, you ready to get started?
Yep. Good morning, everyone. I'm going to share my screen. While I'm doing that, as a note, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it, and he will read them back to me. And to give you a couple minutes to put those questions in, we'll start out looking at our pre-market report to see if we could get insights, what's going on in pre-market hours, and then we'll move on to the questions. Okay, so up top here on our pre-market report, we do have this calendar view, which does allow you to go back to a historical date if you wish to see what happened in the pre-market hours on a particular date. You could use this calendar over here by clicking on it and dropping it down. We do show from a high level the last weeks of data. This way, you could, if you spied anything unusual or a trend, you could eyeball it from here. So far today, we are on March 1st, and we have 649 stocks trading higher today in the pre-market, 324 stocks trading lower. As far as volume goes, we have 134 million shares trading on up volume, 77 million shares trading on down volume. And if we convert that volume to dollar value, we have $3.8 billion worth of stock trading higher versus $1.4 billion worth of stock trading lower. So from this perspective, it looks like there's a bullish lean in a pre-market trading. Let's take a look at it from a couple more perspectives, and then we will move on to the questions. All right. So coming down here, now we see a list of stocks and stock symbols that are trading in the pre-market hours. We have a most active stock list, our biggest percentage gainers and biggest percentage decliners. We have 103 stocks that made our percentage gainers list, 44 on our decliners list. And that also indicates that trading in the pre-market hours so far looks like has a bullish lean, bullish sentiment. And to make this list, we do set certain thresholds for price change, liquidity, volume, because things in the pre-market hours can trade either with low volume or low liquidity. So any security that meets those thresholds and it's trading in pre-market hours and it's listed on a major US exchange, it could make it onto this list. So that includes small cap stocks. You can see the market caps here. It could be an ETF. It could be a leveraged product. It could be an inverse product. And to narrow this list down further to a small group of stocks, we could use the filters above. If you have a watch list and you saved a certain group of stocks that you like to track, you could filter this list by your saved watch list. We're going to use this filter here in ETF and drop it down. We have different ETFs to select from. I'm going to choose this one, SPY. That's the S&P 500 ETF. And when we choose that, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see 12 stocks made it onto our biggest percentage gainers list and 5 on our decliners. So that also indicates that there's a slight bullish lean in pre-market trading. Well, we gave it a couple minutes. If you have questions, I'll take those now.
Yeah, we had one. Rick Wise came back. He had a question about the option calculator a few days ago
Yeah,
about saving a spread if there was a way to do it. You showed him how to do it, and then he came on the next day, and I guess it's
yeah,
saving maybe prices at the end of the day or so. I don't know, but he said he sent an email and was asking if you had a chance to
yeah,
look at it.
yeah. So yeah, thanks, Rick. I did. I looked at the email and I sent it to our developers to take a look at it. So it's um the way you were requesting, that's not how our option profit calculator saves those prices. Um, and so far, the developers are looking into it. I didn't get an answer from them, if there's a different way to save those prices and track them and bring them back to the options chain. So I don't have an answer for them because there's other things in the background involved that could potentially break, and it's not an easy basically the way you've requested it, that's not how it was developed to track prices. So we would
So can
have
you
to
take, just
change the
for my clarity so I understand, can you take that same spread, just price it off the option chain
you
and put it
yeah,
and stay and save it to your watch list and it'll save those prices? Is it just with the option calculator?
so it saves, I believe it saves the market prices, not your uh
I got not your inputs.
yeah, not your inputs, but you could change your inputs, when you go to the options chain. So it'll save all the legs, right? So let's say tomorrow you come up and you want to see it. Well, what happens is if you launch it from your options, from your watch list, it'll take you to the options chain and populate the most current prices. So the idea there is that you'll be able to see, well, where is it at right now? Right now, not where did I save my prices, but where's the current uh prices on the option on the strategy. So imagine, like, if you save a watch list, like it's just like our stocks, right? If you save your stocks to a watch list, if you go to that stock, it's going to show you the most current price, not go back.
Yeah, no, I get it. But it will
Yeah,
on the
so
watch list, the original prices will remain. Is that the
so I believe you could edit. So if we go to the watch list, I'm not sure if this part works. So I had the developers looking into it, but I don't have an answer yet. So I didn't uh respond. But I believe, like, over here, right, you could have it's user entered. So these are the prices that, for example, I entered in, right? And I think you could edit it by clicking on here. I believe you could edit it from here. Let me just try real quickly. Okay. So let me see. I have to, again, I don't remember exactly how this one works. So
no worries?
let me just see if that works. So maybe that one is a bug. Like, let me just see, because it doesn't look like. Let me see if that changed. So yeah, so maybe this part is a bug. Look, I have to check again. Rick, I'm sorry, I don't have an answer right now for you. As I said, this was more of a technical question for our developers, and I sent it over to them, and they have to review it and get back to me.
Well, there you go, Rick. Hopefully that
Yeah,
answers the question.
yeah.
All right.
That's why I didn't reply yet, because I'm waiting for the answer myself.
Awesome.
Yeah. Yeah, where was there was there a different
Nope.
question
No
besides
other
that?
question.
Okay. So let's go to SPY while we're waiting. Maybe go to our default. And maybe what we'll do is let's take a look at the multi-leg trades that traded yesterday. No questions are popping up. Take a look at multi-leg trades. and this will pop up the most traded multi-leg strategies over yesterday in SPY. So it could come down here, and here we by default list the top 5. We could tab through down here. Let's go back to the top 5, and up here, as a reminder, if you guys didn't see, if you wanted to fill by, this detected 67 different option strategies yesterday that traded. So you could see here. And of course, a particular strategy, like a put spread, could have many different combinations, but this is right now filtered by strategy. And then if you click on it, it'll show you all the different strategies that we detected for put spreads. And up top, just to go over what this means again, is that between 244.51 and 248.22, whoops, I clicked on it, so it's giving us the details. We detected that this particular strategy, this interpretation, traded multiple times, 44 different times, and total option volume contracts involved in that strategy was 327,100. And we see the legs here. Okay, so right now we have 4 legs. So this is describing, this is a 4-leg call combo calendar with ratio. Basically, the machine's looking at it and saying, I don't know what to name this thing really, so I'm just describing it the best I can, which is saying they're all calls, right? There's four legs, 4 different calls here. There are 2 different there's at least 2 different expirations involved. That's why I defined it as a calendar. And it also detected that there was a ratio involved here. In other words, they were not all equal quantity. Okay, so let's take a look what this means. In March 1st, it detected that a 508 call spread traded, and that has 1 day to expiration, right? This was yesterday's trades. We're not open yet. So yesterday's trades had 1 more day to expiration. And then as part of this trade, there was a March 22nd, 515, 525 call spread. Okay, and that has 22 days to expiration. But this second call spread was on a ratio of 1.5 by 1. So for every 1 in March 1st, there was 1.5 contracts on March 24th. Okay, so that represents all 4 legs. So basically, it's kind of like a call spread in a near expiring option, near term, versus a call spread in March 22nd that has higher strikes. So let's just think about what it might be. All right, what could it be here? And then we'll look deeper into the details. We'll come back down here to the details. But what can this potentially be? All right. Well, potentially there's a trader out there that may have this call spread that's expiring today, 508 call spread, right? That's potentially where he will roll it because it's going to expire today. So maybe 1 day earlier he'll roll it. That's one idea. It's not the only, but let's look at it from different types of perspectives. Logically, what could it possibly be? And then we'll check, we'll check other things to see if we could, validate that. So one potential is there is a, position out there that has the March 508 call spread. And it could be a bullish call spread. Maybe it's even in the money at this point. Let's see. So it's fully in the money, And if you want to maintain a bullish posture, you might want to roll it out further, right? And maybe to higher strikes, right? So maybe you continue to say that it's, yes, maybe when higher, I want to roll it even to higher strikes because I think it will continue on that path. So kind of like, if you're long a call and your call goes into money, it's about to expire, you want to maintain a long posture and take some of that off and roll it up to a higher strike. Well, you could do a diagonal call spread, right? Like a diagonal call spread, or you could even do a diagonal call spread on a ratio basis. You could take the call and let's say, you bought it for $1 and it's $5 all of a sudden. Well, you could, and then you have this other call out here that you want to buy that's $2, let's say. Well, maybe you sell one and buy two of the higher strike, right? And keep something left over, whatever it is. So you could do a diagonal. You could even do a diagonal with a ratio. You could even buy more. And again, I don't know if this is what happened. I'm just looking at it and saying, what are the potentials here? Why, what can be going on? Obviously it could just be a spread that had nothing to do with prior positions as well. So just like describing a potential roll on a call with a ratio, perhaps you could roll a call spread too. You have a call spread, it's in the money, about to expire, you roll it up to a call spread that's further out, and maybe even do different strikes, right? You do higher strikes. And here, maybe it's even on a ratio, right? So this is a inference. Don't know if that's the case. We could look at other cases, but this is one inference that we could look at. And let's just take a look here and open it up. And this is what it looks like, that the volume, you can see here in the March 1st expiration was 65,000 in each leg in aggregate. And then on March 15th, the volume was 98,000 in each leg. And based on the open interest, maybe not, possibly this was the case. Actually, I believe this is already reflected of the new open interest today. So I got to go take a look at that. But I'm not going to leave this page, but we could look if the open interest changed that way, where it was reduced here and increased here, which would support more evidence of that happening. Okay. And we could see here that this spread over here, this is the VWAP, so it's an $8 call spread, traded for about, I don't know, I'm just doing the math in my head here, like $6.36, right? $6.36. And the spread that was traded in the March 22nd, was, a little bit under $2, $1.98, something like that, right? So there was, $6. If you're selling $6, you got, a little bit of, if you're buying it for $1.98, you could buy a little bit bigger proportion, right? So that could be potentially what's going on. So let's just take a look at, I'm going to open this up. Here's traded in a PhilX. These are all the trades here, traded at different times, 44 different times. Here. So the machine didn't give us the prices because it was not certain enough yet, like what's going on. So I'm making that inference right now, so just zeroed it out for now. So you got to look into it deeper. So let's just take here's 253,000. I'm going to open this up, 4 legs, and there they are. So this is how it traded. So these 4 legs, you can see they traded simultaneously on the Philex over here. And here are the prices for each leg. Okay. These are the different strikes like we were talking about. So March 1st and March 1st, March 22nd, March 22nd. These are the quantities here. So as far as the price goes, the one price, $7.49. Looks like it traded even below the bid. All right, so it was a floor trade. It went up on the floor. Looks like it, because of the size of the trade, whatever was pre-negotiated, that looks like, okay, traded below the bid. And this one traded really on the bid. Okay, sorry. Let's look at the March 1st. Okay, so March 1st, they both traded below. Okay, they both traded below, but to me, it looks like 749 versus this market is way lower than 114 versus this market. So that would suggest that there is a selling of that call spread, right? That's what it kind of suggests, right? Based on the markets, it looks like that would be below where that call spread is bid. And relative to this call spread now, 264 and 66. So you could see above in the bid, that looks, a little bit out of line. But if I took all of these prices and had to make an inference of what happened, okay, if I'm without seeing more data, if I had to make an inference, what happened here? Well, to me, based on the prices in the markets, we could do the calculator, it would look like that would be the case, that we're selling the near term, buying the further out. Okay, if that's what suggests the case. Obviously it could be anything, though. It could be selling both, but we're trying to see here what might have happened. So here's yesterday's actually open interest. So this might help us. So on March 1st, right? March 1st, the 500 call, here's the 500 call. Yesterday, the open interest was 116. Today, it's 70. So it decreased, right? March 508, yesterday, this is the 508. The open interest was 79,000. Now it's 41,000. So that also decreased, right? That decreased. So we'd have to look what else traded. We don't know if there's other volume in there, but let's just, if we continue with our inference, that would suggest, okay, that there might have been a call spread there that existed that was closed out, right? Because the open interest decreased. So we don't know yet, but that's the suggest. It would still support our theory. So far, there's evidence to support our theory. Well, what about March 22nd? Well, here we see that there was barely open interest, 5,000 on the 515 call and 1,386 on the 525 call. So there wasn't a lot of open interest there yesterday, very little relative to what traded. So after these 98,000, you could see the open interest zoomed up, right? From 5,000 to 103,000, from 1,038 to 99. So far, just from my initial, from experience, what may be happening, from seeing it many times. So far, the evidence as we're going through it suggests and supports that theory that there's a big trade, and then we could go back and even find that trade. Okay, so we could go back and now we know to look for the 500, 508. But so far, our theory, and the data that we've analyzed supports that trade over here looks like, yeah, there was a person here riding a call. We'll have to go find it when it was put on and what price, but a call spread 500, 508. And actually it hit 508 yesterday, like right there, 508. It actually hit that upper strike. And, so it was already in the money, fully in the money. It still has a day to go today. But to me, it suggests that he rolled out of that. Let's take a look. Right. He rolled out of that call spread and went out the next, to March 22nd to higher strikes on a ratio. So let's just take a look at from March 1st, you're talking about if you're selling, total sale of 38 million versus 5 million. So on balance, he would have received 33, right? Roughly $32 million, right? So $32 million from that sale, right? So if you're selling, you're the 500 call and you've received a total of 38 million and you're buying the 508 call, 5.7 million, you got like $32 million in net proceeds after that sale. Then you go out and you buy this 515 call for 20 million, sell the 525 call for 5 million. So even on that ratio, you're getting 32 million coming in, 15 million going out. So you're still rolling it out, keeping some of that proceeds, in-house. All right. Well, we're right up at 9:30. So I just wanted to kind of go through an example of analyzing the. Oh, well, you're on mute.
Sorry about that. I was having a little bit of a sneezing episode. We did get a question from Heats. Maybe we can go over. I'll copy and go over on Monday. He's asking about open interest, how it changed, and how reliable it is. Anyways, with that, we will partake on our Friday trading session and see everyone on Monday. Great job, D.
Yep. All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day. Have a great weekend, and hope to see you guys on Monday.
Trading.